Hello, good evening, good morning, good afternoon, good day, everyone. How are you doing? I hope everybody is doing great. Okay, I can see Shuki. Hello, Shuki. How are you? How are you doing? All right, Suki Yashi from Scotland. Hello. I'm a Scottish. I'm a Scottish. I'm from Scotland. Hello, Suki. How are you? Yeah, good to see you. From Scotland to England. Great stuff. Are you joining this channel for the first time? Shuki, is that your first time of joining this channel? Hello, Demi. Yes, good. Yes, I'm good. Thank you so much. Excellent. Thank you, Demi. Thank you, Shuki. Good to see you both. Excellent. So, how's the weather with you there, Demi, today? How's your weather like? I know you are in a nice country with a lot of sunshine, right? Kevin, hello. Yes, I know, Kevin. It looks like 2 years ago, right? And it's only a few weeks ago. Yes, 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 yes. Yeah, it's only a few weeks ago, but it's quite a long time for me as well. Not just for you guys, but for me it's long time. Good to see you again. So we're gonna do something new today. We've been talking about SBS for quite some time, so we want to change the topic a little bit and make it refreshing. So if anybody have question about SBS, they can still ask those questions. So I just want to show you something new today, fresh. All right, very sunny there. Okay, weather here is not bad. It's similar weather, like mid temperatures, not too hot. Very nice. Okay, good. All right, so today we are gonna go through a topic I've selected for you guys. I hope it's not going to be too hard to understand, but it's a technical topic, but I think it's going to be useful for you when you trade. Okay, so I will share my screen shortly so you can see what we are going to cover today. All right. Right, you can see my screen now, right? Okay, so this is what we are going to cover today. We're going to talk about correlations. I don't know how many people have heard of correlations before. So if you know a little bit about correlation, Vangelis, good to see you. Vangelis from Greece, am I correct? So who's this guy who knows where I'm coming from? Is Evangelist from Greece, is that correct? Or is he from Italy? All right, so if you know something about correlation before, if you've heard of it or if you have used it, can you make a comment so I can see that you know it already, or you have used it in trading, or you know how it works? But if you don't know anything about it, don't worry, we're going to go through it in a moment. I just want to get a feel of understanding of how many people have used it before. Yes, after a long time. Yeah, I know. It's quite a long time. Oh, US 30. Okay. Jayesh. Jayesh is here today. Hello, Jayesh. Long time. Good evening. How you doing? I miss you all, guys. I miss you, everybody. Miss you all. Okay, so no one has used correlation before, or no one has heard of correlation before in Forex. Okay, so nobody has heard of it. Okay, hello Jayesh. Okay, good stuff, good stuff, good to see you. Have you heard of correlation before in Forex, or have you used it? Jason, good to be here again. Yes, good to see you again. Lovely, 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 lovely. Good to see you. Okay, so, all right, let's talk about correlation then. It doesn't look like many people have used it before, so I'm going to slow down and discuss it. Okay, okay, so Jayash hasn't used it. All right, so today we are going to look into what correlation is between currency and commodity. Okay, so we know there could be some relationship between them, so we are going to check it out today, whether there is a relationship or not within some currencies and some commodities. So we all know what commodities are, right? So gold, silver, all those stuff, they are called commodities. All right, and you know what currencies are: Australia, US, all those stuff. Okay, oil as well is a commodity. So we're going to look at commodity prices and currency moves. We're going to look at specifically at Australia US dollar versus silver. Also, we are going to look into oil. What is the relationship between oil and Canadian dollar, if there is any relationship? And we're going to go for gold, and we're going to summarize everything. So I reckon it will be probably about 10-15 minutes to discuss it, might be less. And then after that, we'll go into our charts, and I will show you some practical examples. Okay, so we are ready to go. So first thing we are going to look into is what is commodity prices. Okay, you know, professional forex traders, they have long known that trading currencies require looking beyond the world of FX. Currencies are moved by many factors. You know some of those factors, which include things like supply and demand, politics, interest rate, speculations, economic growth. These are all things that affect currency, that make currency to move. More specifically, right? Economic growth and export are directly related to a country's domestic industry. So it is natural for some currencies to be heavily correlated with commodity prices. And we have the top 3 currencies that have the highest correlation with commodities. Those 3 currencies, you must know, they are Australian dollars, the Canadian dollar, and the New Zealand. Those 3 currencies, they call them the commodity currencies. If you heard the word commodity currencies, that is what it means. Those are the 3 major countries, and you will soon see why that is the case. So why do we say Australia is a commodity currency or commodity country? Why do we say Canadian dollar is a commodity currency, or New Zealand dollar? Okay, you will soon see. But those currencies, they are influenced by the price of commodity. So commodities such as gold, silver, bronze, and other commodities like that. Okay, so we will see why are they in such a relationship, and how can we make use of those knowledge. So let's look at this chart. For example, you can see the blue one is the Aussie dollar, and the green one is the silver. You know, silver is a commodity, like, you know, you silver spoon. You know, everybody use silver. What do we use silver to do? You know, for spoons, we use a silver chain, hand chains, all those stuff. You know, silver door handle. You know, silver, different things we use silver for. So this is the correlation between Aussie and silver. Okay, so You know, there's difference between positive and negative correlation. Okay, I hope who knows the difference. If you know what is positive correlation, you can let me know, or negative correlation, what does it mean? Okay, so correlation means relationship between two things. They are related, they are correlated, like a family. Okay, so there could be a positive correlation and there could be a negative correlation. So when there is a positive correlation, what that means, yes, Jais is right. When there is a positive correlation, it means both are going in the same direction. Okay, that is positive, going in the same direction. When it is negative, it means both are going in the opposite direction to each other. That is a negative correlation. So as you can look at Aussie and silver, that is Aussie dollar and silver, what do you see? Do you see a positive correlation or do you see a negative correlation? Okay, so that's a question I'm going to ask you, and think of your answer and put the answer down in the chat box if you know whether it is a positive or negative correlation. So we know that it is not a secret that Australia has a significant portion of their economy tied to mining. Australia is a mining country, but most people don't realize the scale. With over 2% of the workforce in Australia are employed by mining companies. Over 5% of the GDP depend on it. And mining itself only contributes around 35% of Australia export. The whole of the export in Australia, 35% of it is coming from silver. So you can see how the price of silver will affect Australian dollar, where nearly half of your exports or half of your economy is depending on one particular commodity, which is silver for Australia. Okay, so therefore the fluctuations of the metal market, which is metal market like silver, will have a large impact on the outlook for Australia. It will have a big impact on Australia because of the heavily dependence on the on this metal. Okay, all right, Evangelist, you are correct. It's a positive correlation. That's good. Yes. So Elaine, Stephanie, yes, it's a positive correlation as well. They behave the same way. Yes, Shuki, both of you, all of you are right. It's a positive correlation. Okay, so that is the Aussie, US dollar and silver. Positive correlation because they will go in the same direction. Can you think of other countries that might be in the same shoes with this kind of link? Remember oil? We're going to go to the oil very soon. First of all, before we get there, start thinking of countries that are oil producing countries and their economy is wholly tied to oil. I know some African countries. Some African countries, they depend on oil, heavily dependent on oil. And you know what happens when the price of oil is going down? What happened to those countries' economy or even their currency? At the same time, when oil price is going up, you know what happens to those economy and their currency? So that is what we are talking about here. So this is a very, very practical lesson which you can actually see around you. Jayesh. Canada, yes. Nigeria, yes. Libya, yes. So those countries, they rely heavily on oil. All right, let's go. Let's check it out. All right, so as we said, the fluctuation of this metal market will have large impact on the outlook of Australia. Okay, the Aussie currency, even the economy as well. Now let's go to US, Canada, and oil. Okay, so we are talking of Canada here, Canada and oil. Okay, what is the relationship? Okay, you can look at the blue color this time around is the US dollar Canada, and the green color is the oil, the crude oil. Okay, now you can see the relationship is different from the one we saw before, right? You can see that US dollar Canada is not going in the same direction as that of the oil. So who can tell me what sort of correlation this is? Is this positive or negative correlation between US dollar, US CAD and oil? Okay. So while you are doing that, oil is one of the world's basic necessities. We all know about oil. We use oil for nearly everything. The cars, the industries, everything requires oil. Without oil, probably majority of countries cannot function. You won't drive automobile. You won't even have a plane or all those things. They are all generated from petroleum. At least for now, most people in developed countries cannot live without it. So whether we develop or not even develop, most of us cannot live without this oil. As a net oil exporter, so Canada is a net exporter. Okay, so we all depend on this oil, and Canada is a net exporter. What does that mean? It means Canada actually have more oil than what they need, so they export. Yes, that's good. Negative correlation, Jais Vangelis, negative correlation, that's correct. So it means Canada do have oil reserves and they export oil to other countries. So that's how they also generate their own national income. Okay, that's right. Amin Doki David, negative correlation, that is correct. Okay, so Canada will be severely hurt by the decline in the oil price. So if anything happened to oil price, Canada will suffer. Okay, because they are exporter, they are selling oil to other countries, so they are making money from that. That is their own export revenue. That's where they generate that revenue from. Look at Japan on the other side. Okay, Japan on the other side. Let me go back to where we are. Okay. All right. So Japan on the other side is a net oil importer. Japan is a net oil importer. Canada is a net exporter, but Japan is a net importer. That means Japan don't produce oil, but they need a lot of it. They need a lot of oil, so they have to buy. And that means when oil price is going down, Japan will be happy. So Japan is happy when oil price is going down because they will spend less money to purchase it. But Canada will be hurt when oil price is going down because they are the one making money from the oil. You see how this oil now affect different countries and can affect their economy and their currency. So if you hear that oil price is rocketing up, what will come straight to your mind? To Canada or Canadian dollar. You'll be thinking, wow, Canadian dollar will be shooting up very soon because they are closely related to oil, and oil price is going up, so CAD will be going up. Okay, same thing if oil price is tanking. You just had maybe Saudi Arabia has decided not to cut production, and maybe Libya also decided they are not cutting production. Nigeria said, look, nobody is going to cut production. We are going to produce as much. Let everybody, let the market determine the price. We are not doing any oil cartel. We are not fixing the price. Let the best man win. Let the best country win. So now we have the gluttons of oil. We have loads of oil, but no buyer. So in that case, oil price will go down. And once oil price is going down, what happened to US CAD go down, but Japanese will go up because they are happy for oil price to come down. CAD is not happy. Okay. So the correlation. So on a daily basis, the correlation between oil and Canada dollar may break. It may break, but over long term, it has been very, very strong. Okay, so if you look at it historically, it has been very strong. Okay, because the value of the Canadian dollar has good reason to be sensitive to the price of oil. Canada, listen, Canada is the fifth largest producer of crude oil in the world. Okay, so the size of Canadian oil reserve is third in the world. So even though they are North American country, they are the fifth largest producer, and their reserve is the third biggest in the world. So you can see how much relationship between oil and Canada. So if you remember that anytime you are trading Canada, if you remember that Canada is tied with oil, and you are hearing something about oil price, or you are reading news about oil price, that say for example there's so much oil in the market and most of the countries are not buying them, you know that's a problem. Or you said, oh, the demand for oil in China has just started rising again, and the manufacturers are starting looking to buy more oil. You know what is going to happen to Canada or Canadian dollar. Okay, so now once we see the relationship between them, then we can make some informed decisions. Okay. Now the next thing let's look at gold. Okay, so we have talked about silver, we have talked about oil. Now we are going to talk about gold. Okay, gold is also another commodity. As you know, we've talked about silver as a commodity, oil as a commodity. The next one is the gold. Okay, so we talk about Australia, that is related to silver. You remember that's the one we started with. At the same time, it's also related to gold. How many countries, or do you know any other country that has a tight relationship to gold? I know some people will know some. So give me examples of countries that you know are tied to gold. Yes. Assalamu alaikum. Yes. Assalamu alaikum. Madu. Yes, so do you know other countries that are tied to gold? If you are from Africa, I know there's a specific African countries that are very strong in gold. Can you give me one or two? Or even any other country that are tied to gold? I know few of them, and we can analyze their currency based on that. Okay, give me examples of currency of countries that you know they are tied with gold. Okay, USA. Is it tied with gold? Yeah, they have gold reserve, right? Some countries produces the gold, but some countries actually buy the gold and store it. Okay, Tanzania. So Tanzania is a gold mining country. That's great. Okay, yes, South Africa, 100%. I'm certain of that. They used to call it city of gold, isn't it? Johannesburg is the city of gold because it was built majestically. It was a very, very nice constructions in those days when it was built. Yes, they have mine. Yes, so Liberia, I think there's was it a gold? Liberia also has mineral resources. I think gold as well. Diamond. No, Liberia is diamond. Yeah, Liberia is diamond. Yes, Saudi Arabia is It's a great oil producing country. In fact, if not number one in the world. Yeah, so South Africa is a great gold mining country. Tanzania also mining country. And we have countries that actually mine these metals in a big way, that it becomes big part of their economy. Okay, so trading the Australian dollar is just like trading gold in many ways. Okay, as the world's second largest producer of gold, these Australian people are good, you know. They are blessed. They are blessed with a lot of mineral resources, you know. As the second largest producer of gold, the Australian dollar has a high positive correlation. Okay, they are the second largest producer of gold, so they have high correlations. They have a very high positive correlation between the gold and their currency. So generally speaking, what this means is that when gold prices goes up, Australian dollar also will go up, because there's a positive correlation. And once gold price goes down, Australian dollar will go down as well. You can see these two charts. One is the gold and the other one is Aussie Australia. Okay, Australian dollar versus US dollar. Okay, so when you see that the gold is falling, Aussie also is falling. Okay, and vice versa. Sometimes they might decouple. You know, decoupling means that the relationship is temporarily broken, but very soon they will come back again. Historically, they are related, they are correlated. So advantage sometimes do happen when you see a decoupling. That is, there is a gap between the two of them. You know that this gap is going to be filled. The gap will come back later. So as a trader, you will know that, look, this might be an opportunity to take some positions here, because you have seen that this gap is going to be temporary. It will close. It might take a while, but it will close again, because they will come back together. As you can see, they will usually, there's a gap here, but eventually they come together. There's a gap open here, they come together. There's a little gap open here, they come together. Another gap is open now, right? So they will come together. So these are bigger picture. These are not intraday strategy, kind of, not 5 minutes or 10 minutes strategy. These are bigger picture, economic, looking at fundamentals, looking at the big picture. What is going to happen to Australian dollar in the next 3 years, for example, or in the next 1 year, based on the price of gold. You know, let's say now we discover that Australia just discovered a new gold mine, and you just read that from the news. That, hey, Australia has just discovered a new gold mine, and you're a currency trader. What should you be thinking? You'll be thinking, yeah, I have an edge now. I have information that some other forex trader don't have. They don't know about this, but I know it. It's no longer a secret that you know. That because they've discovered gold, for example, and they will benefit from it, the whole country will benefit from it. Therefore, Australian dollar will benefit from it in a long run. You might not see it in a 5 minutes chart immediately. It might be in the next 3 years. You see, let's say Aussie is trading at, let's say, 1.2 against dollar. And very soon, you see that Aussie will appreciate against dollar in the next few years based on that information. All right. So, any question, if you have any question, you can shoot it as we do our summary now. Okay. So the summary of the matter is that if you want to trade commodity currencies, Australia is a commodity currency, CAD is a commodity currency, and New Zealand. We didn't talk much about New Zealand because I focus more on Aussie and Canada. The best way is to use, the best way of trading this is to keep your eye on the movement. Okay, so you keep one eye on the movement of oil or gold, and other eye on the currency market. So you not only focusing on the currency market, you also be looking at what is happening in the commodity market. So this will give you an edge. This will give you opportunity to make your mind up about the direction of a particular currency. You know, so if you look at Australia US dollar against gold, we said if gold is rising, Aussie US will be rising. Okay. But I want to throw you something now. USD CAD. Remember that USD CAD is the other way around. If oil is rising, Canadian dollar should be rising, correct? But if you look at the currency pair called USD CAD, USD is the base, CAD is the US is the base, and the CAD is the quotes. Okay, so when price of oil is going up, USD CAD will be going down because of the way the US and CAD pair is being designed. If it is called CAD US, for example, CAD US, then when oil price is going up, Canada US also should be going up. If oil price is going down, Canada US also should be going down. But because they have swapped around the US CAD pair, so they swap it around. Instead of saying CAD US, it's now US CAD. Therefore, it will have opposite effects. That currency pair will be going the opposite direction of the oil. Okay, good. How to trade? Yes, we will look at some examples what we can do. Yes, everyone is allowed. You're welcome. Majo, you are welcome. It's not a private class. It's a general class for everybody to attend. Okay, so I will show you how to determine the correlation now. Okay, so if there are more questions, you can still shoot me those questions. I will answer them. But now I want to show you how we make those correlation up. Okay. All right, so what I'm going to do is to share my screen. I'm going to put in, let me put in a particular currency here. Okay, I guess you can see my screen now. Okay. You're welcome. You're welcome. So I'm showing you my screen now. I will show you. Take this grid off. Okay. So let's look, because now we've talked about Australia dollar against silver. We talk about Australian dollar against gold. We talk about US Canada against oil. So let us see how this thing works. Okay. So what I'm going to do first. Let me go and look for silver. You know, the silver, I believe, is called SAG, right? SAGUSD. Let's look for it. Silver. SAGUSD. Right. So this is silver versus US dollar. So that's silver versus US dollar. So I'm going to drag that to the chart. Okay. So this is 1 hour chart. That's 4 hour chart, daily chart. You can see, looking at the price of silver, you can see that is bullish, very strongly bullish, right? So silver has been doing very well on a daily 4 hour chart. It's always going up. Okay, so we have that. Now I got an indicator here called correlation. This is an indicator called correlation. The function of this indicator is to build relationship between two pairs. It's going to build relationship between two currency pairs or two charts. Okay, so we have put our chart number 1 here, which is the silver. We want to build relationship between silver and Australian US dollar. Okay, so we put our first chart. It doesn't matter which one you put first. You could put Australian dollar first, or put this silver first. Now you will drag the correlation on that chart, the indicator. Okay, so you drag the indicator on that chart. Okay, so when you drag the indicator on the chart, you know the first chart is the silver, but you want to link silver and Australia US together. So now the indicator is asking you, what other currency pair do you want to combine this with? You want to link silver with. So silver and what do you want to correlate together? So, and we know we are looking for Australian US dollar. So you type it there. You type AUD USD, which means Australia USD. AUD USD. Okay. Make sure you type it properly, because if you miss a letter, it wouldn't find it. So it will just go through your market watch list and find a currency with that symbol. So the symbol name must be correct. With all these other settings, you don't need to touch them at all. Just leave them as it is. But you can play around with them if you want to, but you don't have to change anything. All you need to do is link the two pairs together. So we want to link silver versus Aussie dollar. Okay, the color itself, I could choose, let's say I choose a white color, whatever color I want to choose. You can decide any color you like. So let me make this like 4 so that we can see how we can see, make it tick. Okay, so that's all you do. Just put the currency you want to link. So we want to link Australia and silver. Later on we can link Australia and gold as well, but let's link Australia and silver first. All right, so this is, as you can see, before we have the chart that we have before is the silver. That is the one you are looking at. Later on, we now added Australia US dollar and we made the color white so that you can see the two. So what sort of correlation is this again? If you look at the chart now on a 1 hour chart, what sort of correlation is this two now? You remember we talked about it before. Abel, good evening. Hello, Abel. and your trade mentor. Yes. Oh, you're not late. Don't worry, you're not late. You're not late. You are just getting the big meat. You are in the middle of it. So you just caught it at the right time. Okay, so what sort of correlation are these now? Okay, good. Thank you, Jayesh. So this is a positive correlation. As you can see, once silver is going up, Australia US is also going up. Okay, and somebody was asking me, how can you take advantage? Okay, simple way of doing it is this. You can see that because they are correlated, you know that they're gonna merge together at some point. So sometimes you see a big gap. Maybe there's a news, or there's a discrepancy, there's a decoupling, as I explained before. When you see a decoupling distance between the two, it might present you opportunity and say, hey, look here, I am going to sell Aussie when it's too far away, and I'm going to buy silver when it's too far away. So because both of them will come back together like here, so Aussie will drop and silver will rise in order for them to join back together again. Because in a long term, both of them should be on the same trajectory, same direction. So that is the relationship between silver and Australia dollar. Okay. Yes, so it's a positive correlation. That's correct. Yes, positive correlation. Okay. Now let us look at Let us look at, so here you can change the time frame if you want. You can look at 4-hour time frame. You can see 4-hour time frame, which is the bigger time frame as well. It's telling you that, well, these guys are really correlated. They are correlated together, but sometimes, like here, see the gap. It's a big, massive gap between them. But eventually, they will join together again. See, they join together here, they join together here. Now, they couple here, and they went to join together. They decouple there, they join together. Here, they are nearly at the same level. They are joined together. So these are the things that you can be thinking of, you know, when you are, you know, thinking big. This one is not, it's not, you know, thinking like scalping. No, this is not scalping. This is a bigger picture. You know, when you want to take a long position on a particular currency pair, you can use this kind of analysis to guide you. Okay, so what do you want to see? Let's do, we've done silver and Aussie. Shall we do gold and Aussie as well? Okay, so gold is SAU USD. Okay, you know that the base here was silver. So if I change that to gold, it will still link gold and Aussie together. Okay, because now it's just silver that is there. So if I drag the gold and drag it here, it should link gold and Aussie together. Okay, so now this is gold and Aussie. Did you notice anything that they look very similar to the previous one? They look very similar to the previous one. Yeah, gold and Aussie together. In fact, what that is telling me is that gold and silver, they will be strongly correlated, even maybe strongly more correlated than gold and Aussie. So I could show you that later on. I'll show you that later on. But this one is a big stuff. This is like thinking big now. You're not thinking as a retail trader anymore now. You are thinking as a professional trader. This is what they call analysis, analyzing the market. You are not even thinking of where you're going to enter trade. No. You are thinking big. You have broadened your mind. You are looking at Australia as a country. What do they produce? They are producing gold. Okay, what's the price of a gold? Gold now is 1,009. Is it? That's 1,005. So okay, yes, $1,500. So if you look at the price of gold right now, it has hit a high of nearly $2,000, and gold price have retrieved back a little bit. And now, are we going back to bullish on gold, or we are going bearish on gold? And that will have big influence on Australian dollar currency. It will have big influence on New Zealand currency as well. Okay, so this is professional way of trading. They think bigger. They don't look too tiny into 5 minutes, 10 minutes time frame or 15 minutes time frame. They look at the next 1 year, 2 years. Okay. So this is relationship between gold and Aussie. All right. So that is clear. Okay, we might come back to that later on. But I said to you, I want to show you. I just want to experiment what is the relationship between gold and silver, because gold is positively correlated to Aussie, and silver also is positively correlated to Aussie. What is the correlation between the two of them? So that's what I want to check out now. So I'm going to use a different chart. So I'm going to open this is gold. So let me make sure that this has no grid. Okay, so I've opened gold, and I'm going to drag correlation. I told you how to use it. It's very simple. Okay, I'm going to drag correlation onto it. So now I want to correlate gold and silver together. So here I'm just going to type silver. That is, look for the symbol for silver, and it's SAGUSD. Make sure you get the symbol right. X, I think it's XAG, right? So it's XAGUSD. Okay, that is the symbol for silver, XAGUSD, and the other ones you can leave it. Color as we did earlier, we might just make it white as well. The color, it doesn't, it's your choice. Whatever you want the color to be, it's your choice. Okay, so remember, I don't change anything here. If you want to change it, you can play around, but all I did was link the charts of gold and the chart of silver together, and let me see if they are positively or negatively correlated. Okay, so what can you see? That is, of late, okay, this is 1 hour chart anyway. Of late, in an hour chart, you see how tight they are together, how very tight they are together, very, very tight. And before, they use this, they have a positive correlation. I should have asked you that question anyway. I know some of you will get it. So this is positive correlation. As you can see before, even though they were positive correlated, you can see some gap in between them, but definitely the gap will close. This is a 1 hour chart. So if you know that, let's say this is just in June, there's a gap between them, and by the time we go to July, the gap closed, and here it closes. All right. So, but since the beginning of August, you can see there's no difference between the two of them in terms of the correlation. So you have correlation between 0 and 100. So when you have a correlation that is so high, like 90%, you say it's highly correlated. If you have a correlation that is like 20%, you say it is not highly correlated. Correlation is weak. All right, so we have seen now that on a 1 hour chart, we know that these two are really, really correlated, strongly correlated on a 1 hour chart. Then let's now think of let's now think like a forex trader, like a retail trader who wants to scalp. Maybe then you can go to 5 minutes or some other little time frame and spot advantage. You can now spot opportunity and say, okay, I know that these two are highly correlated, they are moving together, but when I see a gap open, I will take advantage because I know they will come back together. You can see there's a little gap here that open. So, and the first one was that's gold. Here, you know, there's a gap there. You can sell gold at that time because you know it has built up a gap to silver. So you can take advantage of that. You can see as well. So of recent in a little time frame, small time frame, it come together, but before it has see, it's wide apart. They come together here, but on a very little time frame, you will see a lot of trading opportunity gaps will open. But on a 1 hour, you know that gap is just it's nothing. It's just an opportunity to trade on the lower time frame because you know that they will always come together. Both of them, they are going to come together. All right, excellent. You like it? Mabju, you like it? Yes, good stuff. Good stuff. Kojo, you like it as well? Excellent. Okay, so let us do one more thing before. Let's do the USD card and oil. Okay, so what I'm going to do this time around, let me put US dollar Canada on the chart. So this is US dollar Canada. So I'm going to drag the correlation on top of that. And this time around, we want to look at gold. Okay, so sorry, not gold, oil. We want to look for oil. Oil is closed on this. Okay, there's a Brent. Is that one trading right now? I doubt it. Okay, that is, I think, okay, no, they are all closed right now on my platform, but during the day you could see that this ones will you will see a lot of movement. Let's see, WTI. So we're looking at WTI. WTI. Let's take this WTI JO. Let's try that. So we drag the correlation there. In fact, maybe what we can do, let's start with this chart first. Let's start with this chart and then link this chart with Australia, with US dollar Canada instead. So now let's link this one with USD CAD. USD CAD. Okay, so we are linking oil and CAD together. It doesn't matter which one you start with. We wanted to start with USD CAD before, but we changed to start with oil. Okay, so we start with oil and we link it with CAD. Let's change our color as well. So we make it white color, 4 and 4. Okay, so you can see here. All right, so remember this is US dollar CAD. So you know that it should be the when oil is going up, Canada also must be going up. When oil is going down, Canada must be going down. So you can see on a daily chart, you can see on an hourly chart, sorry, 4 hour, on an hourly chart, and on a smaller time frames. So sometimes it take a while to build these this correlation together, but if you persist, you will see the correlation between them. So this can be another advantage for you in your trading. Okay, so you have seen the WTI and Canada, you have seen gold and silver correlation, you have seen, I believe this is silver and US and Australian dollar correlation. So this is how you can take advantage by looking at this relationship. When the relationship breaks down, you can take advantage of it. Okay, XTI USD. XTI USD. XTI. XTI USD. Okay, all right, let's try that. So let's try STI USD. Okay, so that's relationship between this is crude oil. Okay, yes, that's crude oil versus versus US. So that's crude oil versus Canada US CAD. Okay, so let's look at the indicator. The indicator there shows me that the correlation is between, yes, between this XTI and USD CAD. Okay, so any question from anybody? A very powerful information. What about gold and Bitcoin? Do they have correlation? That's a good question. I think we need to check it out. Gold and Bitcoin, yes. So let's go to Bitcoin first. So Bitcoin is BTCUSD, right? That's the Bitcoin. So chart window for Bitcoin, yes. As you know, I don't like to see greed. Okay, so we know the Bitcoin is on the charts. Now let's drag in. You want to know relationship between Bitcoin and what? Gold. Okay, so now let's put gold and Bitcoin together. Gold is SAUUSD, right? SAUUSD. I hope I'm right. SAUUSD. I hope that is the right one. If I don't get it right, it will not show anything. It will be blank. Okay, so it does shows. Okay, so you can see of recent in an hour chart, both of them are really correlated, positive correlation. But sometimes they do decouple. You can see they decouple earlier. Let's see. See, now they are correlated here, but few like in June, this is June 10, June 9, June 10. There's a big gap. So if you are a trader that you know that these guys are correlated, you could have bought here Bitcoin. As you see the gap between Bitcoin and gold, you go and take a position in a Bitcoin, buy Bitcoin, because you know that it's going to meet up with this guy later on. It's going to meet up. Somehow they will come together. So you might buy Bitcoin and sell gold. Okay, so both of them will meet up together at some point. But you must go and check higher time frame correlation to make sure that they are really correlated. So now this is a 4-hour correlation. So look flat here, but there's a big gap earlier. Let's look at the daily correlation. Okay, it will take a while to build it up, but it will build it up. Yeah. So this is daily correlation. So you make up your mind as to this. To me, this is not really correlated on a bigger time frame, as you can see. Look at where this is Bitcoin here. When Bitcoin was trading at about 20,000 US dollar. See, it's not correlated to gold at all. Gold was flat. If it's really correlated, gold also should shoot up along with Bitcoin. They should go in unison. But gold remained flat while only Bitcoin was going up. So it is not really correlated. There's no serious correlation between gold and Bitcoin. But of late, you can see this seems to be correlated of late. And you remember that Bitcoin also, they travel on their own this time around. When it was hitting this high, it was a lot of speculations, people buying into Bitcoin. I remember people buying Bitcoin for $1 and they are selling Bitcoin for for nearly $20,000. But everything has come down now. So everything has come down. And so for now, yes, currently they are related. But historically, as you can see, it's not a very good correlation between two of them. Excellent. All right, that's a good question. Very good question. All right, so you see this indicator that I'm using here, correlation, is the one building this together. So the correlation indicator, I will let me give you a link if you want to download that correlation indicator. Now I'll give you a link to download it. The correlation indicator, I've put it somewhere for you where you don't need to put your email address in on YouTube anymore. Before you used to put your email address on YouTube, but not anymore. What you can do now is just go to this link and download it. It's a gift, okay? It's a gift that I'm giving you. So go there, click that link, and download it. That's all. So I will not put I won't reply email asking me for download. I should send them the indicator. But instead of that, the link will be in the description if it's not actually there right now. As you can see, the link is already in the description of the video. Just click that link. It will take you to my website. On my website, just download the thing. Download the indicator. That's it. Good stuff. Any question? So I hope you enjoyed this topic this time around. I will be scheduling more sessions, so you will see that anytime I'm going to have any training, I will put it on a schedule. Make sure you click the bell. If you have not clicked the bell, click the bell so that you can be reminded of my session, of when the live session is going to take place. This video also is going to be recorded, and once it's recorded, you can watch it later. You are welcome to join my Discord channel. I have a very powerful Discord channel, and we do a lot of live trading there as well. So we have a trading room, we have live chats, and we have lessons like this one. So if you want to join my Discord channel, just go to my website, you sign up on the website, and then you become a member. Then you have access to the Discord channel. So let me just quickly show you the Discord channel, how it looks. This is my Discord channel. You can see we got a lot going on. We have strategies, different strategies. We have a lot of different channels, live training room, one-to-one mentorship, trading room. So stuff are going on there. So if you want to join that, you are welcome. Go to the same website that I'll send you the link, join as a member, and then you will have access to my Discord group. All right, any more question? What is the correlations with DE30? Are you looking for correlation between DE30 and which other instrument? Which other instrument between DE30 and what? Let me load DE30 for you first. DE30, this is DE30, which is German. Okay, that's a good point. You know what? You know, all these indices, they will be related. Indices will be related. So for example, US Tech, US 30 will be related, or even with US 200. You can take advantage of that. If you know that US Tech and US 30, they are related, or DE30 is related to UK 100, for example, and then you now see a decouple, a gap between the two of them. It might mean that there's a temporary problem in Germany or in UK, which makes the two of them to be apart. But you know, with time, these two will come together again because they are positively or negatively correlated, whatever it is, they will come back together again. So if you know that already in the back of your mind, you will trade with confidence. You will hold your position as long as it takes to get them back. You cannot determine when they are going to come back, but what you know is they will come back because of the history between them. They know that the history between the two economies is that they always move together in the same direction. And now that you see them decoupled, you take advantage of it and you wait for when they come back again, then you close your position. That's it. That's it. That's the green light. All right. So, right. So, any more question? I think it's a very good one tonight. I enjoyed it. I hope you guys enjoyed it too. So, if no more question, we shall round this up, and then you can go to the description and download the indicator there, and then watch out for my next session. Make sure you click the bell to remind yourself or to get a reminder about my live session, and I will post the topic that I will do. I will post the topic so that you can get yourself prepared. Okay, so you get yourself prepared, ready. So if you are not a member of my Discord group, make sure you become a member, because this what you are seeing here is just a small part of the whole picture. So you want to be part of the big picture. So go on that website, register yourself, and be a member. So when you get to Discord, you can PM me directly. I will chat with you directly. You say you are too late. Oh yeah. You can check the clip. Yes, it's gonna be it's recorded actually. Yeah, you allowed Stripe allowed credit card payment, Fahad. You pay with your credit card or with PayPal, either of them. But a lot of people have actually paid using Stripe, especially from Asia, Africa, different places, and PayPal as well. Yes. So the indicator is free. Just click it and join. That's it. Indicator is free. You can download the indicator for free. Thank you so much. Cobra Trading, thank you. Yes, Stripe and PayPal. Yes, you can do that. Yes, you know, the thing is about trading is that you need to have the knowledge and the education. instead of wasting your $200 or $500 opening a trading account, why don't you spend $10 and learn it first? For example, on my website, I have said I'm reducing it to $10 for any one of you that wants to join, because I don't want anyone to waste their money with any broker. So you join with $10 and you can learn a lot. Then when you are okay, ready, then you can take your trading to a live account, and then you have a focus. So so that is how it should work. It's not the other way around. It's not until when you blow your account, then you want to go for training. You want to go for training first, then start with a smaller account, $50, $100, $200 account, and see how you perform. Okay, so great stuff. Okay, so go ahead, download that indicator. It's free. And then next time I will put my new topic up, and make sure you click the bell so you can get a reminder. All right, thank you so much, everybody. Good night to you all. If there's no more question, then I will chat with you again very soon. Take care all. Good night.